Do you drive for Uber or Lyft and want to know what tax deductions you can take on your tax return? Stay tuned for this video. Hi, my name is Don Ye Curry, and I'm an accountant with International Accounting and Tax Consultants. I'm an enrolled agent, and tax is my area of expertise. If you work for Uber or Lyft, by now you should know that you're an independent contractor, which means you're responsible for your own taxes, and you should be following a Schedule C with your personal tax return each year. At the beginning of each tax year, you should receive a 1099 document, miscellaneous, from Uber or Lyft, letting you know how much income you made through their service. They also tell you how many miles you've driven for them, any type of fees they have taken out for you. But as a business owner, you're still responsible for your own tracking of your mileage, your other business deductions that Uber doesn't know about. So for those of you that have made over $20,000 through Uber or Lyft last year, you would have received a 1099K instead of your 1099 miscellaneous. And that also will be used to file on your tax return, just like you would have did your 1099 miscellaneous. So as a business owner, you will be following the Schedule C, and that's where you're going to include your income and all of your allowable business deductions. Now, to deduct an expense as a business deduction, there are only two requirements that are necessary for you. They have to be ordinary and necessary for you to do business. So even if you're an Uber driver or Lyft driver, you should still be taking the same deductions that other business owners can take. You're not excluded from it. Now, it is still a necessary requirement that you keep your receipts and proof of all your business expenses in order to claim your deductions. So I just want to clarify a few things before we go any farther into deductions. When I refer to deductions, I'm talking about your business expenses on your Schedule C, not the standard deduction or any itemized A deductions. And the reason I say this is because I have received returns where people have itemized on the Schedule A, thinking that they cannot take their business deduction on the Schedule C. That is not the case. Your Schedule C and your Schedule A are two different forms. So if you are going to take itemized deductions, that has nothing to do with your Schedule C at all. So some of the deductions I get questions about from rideshare drivers are car payments. So yes, your car payments are deductible expenses if you use your car for business. The only thing is you do need to take the business portion of your lease payments. So any personal use needs to be separated from your business use in order to come up with the correct number for your lease payments. So some of the other deductions you can take when we're talking about your car are your licenses, tags and title, registration, even taxes that you pay on your motor vehicle. And don't forget another thing, mileage. Mileage is also a deductible expense, but you do need to keep track of your personal and business use just like everything else with your vehicle. So mileage is its own conversation. There's multiple things you can do with mileage. You can take the standard deduction, you can take your actual expenses, but no matter what you do, you are responsible for keeping track of your personal miles and your business miles. And I know a lot of people think they use their car 100% when they ride sharing for business, but commuting is not an allowable expense as mileage. So commuting for rideshare drivers is one of those subjects that's a little difficult for a lot of people to understand. So from your home to that first pickup point is considered commuting. So from that place where you pick up your first passenger and then you start taking rides and driving, that would be considered business mileage. Your last drop-off point, wherever you drop your last client off, from there to your home is going to be considered commuting. Another thing that I see a lot of people taking or missing on their returns are the tax and legal fees. So any tax prep fees that you take for having your Schedule C completed, you should be deducting those on the return. Any tax planning from your accountant, whoever does your tax planning for you, that you pay, can't be yourself. But if you do your own taxes, don't forget your software costs. That should be a deduction. That's a business expense. Legal fees, you're talking to an attorney about your business, you should deduct it. So another deduction you should be taking as a rideshare driver, Uber and Lyft, is your cell phone bill. You are on your phone all day, so you should be allocating a portion of that to the business that you do. So many Uber and Lyft drivers can deduct plenty of other expenses. The food that you give to your clients or your customers. So as an Uber and Lyft driver, don't sell yourself short. You can definitely take a lot more deductions. Don't forget about gifts. You can give out gifts to individuals through your business as a business deduction up to $25 every year. So take advantage of that if you are a giving person. And if you meet all the qualifications for exclusive space, you can also take a home office deduction. But there are other little criteria that you have to meet to make sure you actually qualify for it. But as an Uber Lyft driver, you can definitely take that type of deduction as well. One of the new changes also with the new tax law is that there's now a new 20% pass-through deduction. What that means is, as a sole proprietor, owner of an LLC, you're able to take 20% of your income as a deduction. Now, that means gross income is not the same as net income. So in order to take the deduction, you need to have net income. You cannot have a business loss in order to take the new 20% pass-through deduction. So in order to take this deduction, all you need is a pass-through entity to be a sole proprietor or an LLC, and you can take this deduction up to the year 2025, at which time they will have to revisit the law, maybe change it or extend it. It doesn't matter. Just take this deduction as long as you qualify for it.